How do you decide that it's safe to spend money in your business? I just check the bank account and see if there's enough money. If there is, I spend the money and hope it balances out by the time the bookkeeping's done. Be honest, is this you too? I don't know about you, but I am seriously worn out by this constant game of Russian roulette where I press the trigger on the next new purchase for the business and hope that the business financials aren't shot to smithereens because of it. Or at least not until I can make some new killer sales deals that will fix the hole in the finances and cover up my splurge. One of my least favorite experiences is sitting across from the business accountant at our big fat annual check-in, hearing him explain all the ways in which I overspent and how the magical high profit sales I was looking for in the business never actually came. This is the moment when it hits you like a ton of bricks. I have lost control of the money in my business. After years of feeling this and trying to figure out what to do to stop getting into positions like this, I reckon I have finally found a realistic system that I will be revealing shortly, but if followed correctly, it should change the way you manage the money in your business. I know I'm selling a big dream here, but the truth is, the system I'm going to show you is what I have set up in my businesses too, so that I'm only telling you about something that I actually believe in. Before I share this with you though, there are a few things that are important for you to get your head around to be able to understand the final solution. Let me explain. As a business leader, I'm sure you've seen this formula. It's a classic. Income minus expenses equals profit. It's the basis of the typical financial accounting model that we're all required to apply in our businesses in order to calculate our profits for the purposes of taxes and to show our business performance to banks and investors. That's why we have accountants. The thing is, how many times have you done your year-end accounts and the accountant announces to you how much profit you've made in the last tax year? You then look at your bank account and think, huh? Which profit are you talking about, mate? There's nothing here. Can you see the issue? The problem with the income minus expenses profit formula is that it isn't designed to help business leaders to manage the actual money of the business. At the end of the day, this formula is a paper exercise that reactively measures what's happened in the past. When we're making decisions if we should buy something or not, or whether we can afford a new recruit, we need a better mechanism that works for us. Something like this. Few more points before I share. Do you know the concept of Parkinson's law? A lot of productivity gurus talk about it. Essentially, the idea is that however much time you make available for a task, your work will expand to fill it. So say if you have a 2-week deadline to hand in a report to the bank, it will most likely take you nothing less than 2 weeks to complete it because you procrastinate and your work expands to fill in the time. Now imagine a scenario instead where you forgot that you had to submit the report and you only actually remembered the day before when the bank emails you a reminder. Now, Parkinson law dictates that even though you lost out on the 13 days of the last 2 weeks, your work will contract, and so you will somehow magically manage to complete the whole report in that one day you've got left. You know what I'm talking about. The moment when the deadline-induced panic suddenly gives way to crystal clear clarity about what needs to be done, and somehow you just get the job done. Well, money operates similarly. Food too. Food also operates similarly, but we're talking about money. So money operates similarly. So imagine when income comes into your business and we just leave it there in a big pile to be spent. You'll find that somehow your expenses always manage to expand to use up all that big pile. Now imagine our pile was smaller. Your expenses will contract and you will make do with that smaller amount. Wait, so you're telling me to sell less, bring less money into the business, so that my money pile is smaller, so that I spend less? What? That doesn't make sense. I suggest you hold your horses and let the girl finish. So now comes the final piece of the pie for this to make sense. How do you feel when I say the overarching reason for any business to exist is to make a sizable profit? No profit, no business. I was struggling financially in my business quite a few years back, and when someone I trusted said this to me, it felt like a punch in the face. The reason why it stung was because in the excitement and drama and stress and anxiety and sticking it to the man, I'd forgotten the fundamental reason for starting a business. the ability to make a profit that is larger than what I could earn by doing the same work for someone else. I know there's a whole social element of business too, but at its core, you can't deny that for crazies like you and me, going into business is because we think we can earn more than if we don't. Okay, just in case this whole thing is triggering you, just suspend your urge from running from this video a minute more. You're gonna wanna hear this. The reason why we're losing control of our money and not turning the profits we should in our business is because we haven't made our profit a non-negotiable for the business. Take a look at this. Income minus non-negotiables equals money for business expenses. Shh. Income. The amount received from your customers for goods or services that you have sold to them. Non-negotiables. Something not open for debate or modification. Money for business expenses. What you can spend fearlessly in your business once your non-negotiables are paid. We all know what our income is, and we definitely know what our expenses are. So let me explain your non-negotiables. There are 3. 1, your profit from each sale. 2, your pay as the business owner. 3, the taxman. When we deduct the non-negotiables from our business income as a first step, we're left with the money in our pile that we can unapologetically spend without fearing the accountant, taxman, or anyone else for that matter. Even though our expenses pile is smaller, Parkinson's law dictates that we will naturally contract our needs to spend within these means. So if we go back to the original formula of income minus expenses equal profits, it doesn't actually do anything to safeguard our non-negotiables. Our expenses would expand to such an extent that our profits struggle to even get a look in. The reason why we define the profit, director payment, and taxes as non-negotiable is that without these 3 being taken care of, you seriously have no business being in business. If you need more available in that expenses pile after you've taken out the non-negotiables, it's simple. You either increase your income by making more sales or reduce your expenses. The non-negotiables though, they've got to remain untouched. Now that you've understood the new formula of money management in your business, I next suggest you to watch this video to understand how you put this system into action with your bank accounts and business workflow. Honestly, please, I wouldn't miss this one, because without it, you won't really be able to truly shift how you think about money and your business and gain a proper control of it. Until the next one, you've got this.